Good morning, everyone. We have a very special interview today with Andrei Polgar. He's introducing his book, The Age of Anomaly. The Age of Anomaly. You know I can't pronounce words. Spotting financial storms in a sea of uncertainty. His new book just came out today. Actually, it's about 400 pages, 421 pages, at least for the PDF version I have here. It's a pretty good read. I haven't got through all of it, but he's talking about, of course, financial storms that may be coming up upon us. And of course, we're going to ask him how that can tie into the crypto space as well. So without further ado, I'll kind of let him introduce himself and what made him get the idea to write the book. Good morning, Andrei.
Hey, and first of all, thank you so much for having me on. The thing is, many people know me as kind of the economist dude on YouTube, thanks to my YouTube channel. And I do feel a sense of responsibility that derives from this, and that I didn't want to be left with kind of a lingering sense of guilt for having had certain concerns about the economy, but choosing to keep them to myself, because this is never a comfortable conversation to have, putting yourself out there, talking to people about these things. But I do kind of believe that I owe it to them to articulate my concerns about the economy and especially tell them what they can do about it. So I've launched The Age of Anomaly. Yeah, as you've mentioned, it's a 400 plus page book. It's not exactly something you go through in one sitting, but I know my audience. I know that for most people, it's going to be the only book about financial preparedness they're ever going to read. So despite knowing that editors are going to hate me, and they do hate me for writing this book, it's just too darn long. But I wanted to make it a from A to Z type guide. I wanted to tell people, look, let's start from the beginning with economic history, kind of get you a solid background there. Then we couple that with your willingness to stay on top of current events, and you're going to have automatically this amazing reference point. You're not going to watch the news like you'd watch a movie or binge watch something on Netflix. You're going to say, wait a second, this particular thing, something similar happened 100 years ago. Something similar happened 300 years ago. And it's this sense of perspective that's priceless. I then move on to, as someone who's a pretty hands-on economist, I also trade, including crypto. I don't just read books and then repeat the stuff I've read to other people in my books. I do kind of try to put a good balance between book smarts and street smarts on the table. So we also have...
Oh, go ahead. Pardon me.
That's pretty much the first dimension of my book. All of these things that are going to increase the likelihood that you spot the next financial crisis as early on as possible. But then, of course, my second part of the book is about the exact opposite. It's about kind of having the humility it takes to say, look, no matter how hard you prepare, no matter how well informed you are, the next crash might still catch you by surprise. So why don't we spend just as much time and energy becoming more financially resilient? So I take people through asset classes one at a time, with the end goal of not getting them hooked on my predictions or not getting them hooked on a strategy or another that I spoon feed them. And instead, I try to explain to people how easy it is to become a logic-driven economic thinker. It's not that difficult. If you have a firm grasp of the basics, and this book, I do believe, provides everything people need in that respect, it's not rocket science.
Let me ask you this: what's your background as far as the economies, and how did you get into it? Where's your expertise lie? How did you come to write this book?
I'm a bit of a weird economist in that growing up in Eastern Europe, I started out as an entrepreneur because it's not like people have amazing opportunities over here offline. So I did my own thing. I started running businesses right out of high school, and they went well. I was putting money aside. I wasn't a reckless spender, so I actually had savings accumulated. By that time, I also got accepted to university, and it seemed that things were going great. Except, and this is to a large degree what motivated me to write this book, except life happened. And in my case, at least, one, my mom got sick. We didn't have an amazing medical system here, so I took her to get treatment abroad. And
I want to interrupt, but just so everybody knows, he is in Transylvania, Romania, correct?
Oh yeah. Oh, so yeah, it was a perfect storm. Like on the one hand, you guys can relate to what it tends to do to your net worth to deal with this kind of a medical expense, especially if it involves taking a family member abroad for treatment. And this happened to make matters worse right as the Great Recession was starting. So not only did my net worth go to zero, but my businesses ended up taking a major hit as a result of the Great Recession. And this essentially means I had to start from scratch. I didn't even drop out of high school, out of college. I never went until I got my businesses back on track. I ended up, turning my career into something genuinely sustainable. And only then, from a position of financial security, that I say, okay, it's time to pursue my passion. Let me get my bachelor's, let me get my master's, let me go after my PhD. And it's a pretty weird combination, but it does make me the kind of economist who kind of walks the walk as well, and that I've done so much stuff. From investing in exotic assets like domain names and crypto to I've run 3 hosting businesses, development businesses, an auction platform. I've kind of been all over the place. And it's this combination between having a decent grasp on reality and also a bit of an academic background. I think it enables me to do stuff like write this book or make videos on YouTube from a position of authenticity, I guess.
Speaking of your YouTube channel, go ahead and give your YouTube channel a plug right now.
It's the 1 Minute Economics YouTube channel, and it's just crazy. I started it as basically me saying, why don't I make a video once every 2-3 months? And people liked them. So they were like, okay, why don't you make one about this? Why don't you make some more stuff? And I did. And I looked back a few months ago and I realized, like, oh my God, some of my videos are getting mainstream exposure. Like I had the Great Depression one got featured.
I saw a couple. They're pretty good. They're really well made.
Yeah, that one got featured on MSN. Then you have like Open University over in the UK. They use my stuff. A bunch of smaller universities are starting to use my videos as well, including all the way in Australia. I've even saw my stuff on TV. Like actually, I've seen them in Holland, in Croatia, and Kenya. I saw them a couple of times. So it's crazy how something goes from being a hobby to essentially working, I guess.
Right. Actually, so Tessa, hey, good morning, Tessa. Tessa Hall, one of our viewers, she said, hi, Andre. I saw your interview with Karen Fu. She said it was a pretty good interview. So the one you did with
oh yeah, it was a while ago. Hey, I'm not really good at this.
It's okay. You're an economist. We understand. All right. So, hey, so let's go ahead and jump into the book. It's divided into 2 halves, basically. It's about 421 pages. The first half is saying, hey, you need to be leery. There may be another financial crisis on the brink of everything. Without giving too much away. Give us that short synopsis of what your book offers, what value does it bring, and why people should read it.
First and foremost, I try to get them through economic history in an entertaining way. So I start with the first recorded asset bubble, with the tulip mania. So I start all the way with something that peaked in 1636 to 1637. Then I take them to modern day stuff, from basics that everyone knows, like Great Recession, Great Depression, to essentially, for example, the short domain mania of 2015 to 2016, when you had domains which, due to a huge influx of interest from China, went from being worth $8 in 2009, 2010 to being over $2,000 each in 2015 at the end of the year. And by doing all of these things, I essentially help people understand that history might not repeat itself and that the manifestations are not identical, but it does tend to rhyme. And the same way people, for example, borrowed money, some of the first people who got rich during the tulip mania were weavers, because they said they used their expensive looms as collateral and borrowed money against them so they could buy tulip bulbs. And the same way, fast forward to 2015, I still remember having conversations with brokers from China who told me how amazing it was that people were getting high yield loans in China so that they could speculate on short domains. And obviously, when I asked him what would happen if prices go down, he never really had given that much thought to this possibility. So it's how crazy is it that so many
prices always go up, they never come back down.
Never. Come on. I mean, hundreds of years apart, we have events which make it clear that even if, again, they're not 100% identical, but we do tend to make the same mistakes over and over again. And that's why I'm so big on economic history, because it gives us a glimpse into who we are, into what makes us tick. And it's that proper understanding of economic history that, as I've mentioned earlier in our conversation, is going to give us a good reference point. Now, this knowledge of history, coupled with the ability to stay on top of current events, and I actually tell people quite a bit about it. I even have subchapters about making the most out of mainstream media, making the most out of alternative media. Like the only position I have right now in crypto is involved to a large degree me using mainstream media as a contrarian indicator. So
right, exactly. Yeah, that's what we always tell people.
You can find ways to make it work. And okay, then there's that part. Then there are, timeless stuff like economic principles, mindset related stuff, basic economic wisdom, if you will. Things that don't have an expiration date. And that's the great thing about it. And then as we move on from asset class to asset class, people realize that as they get closer to the end of the book, it all starts to kind of make sense in their minds. They start knowing exactly, okay, for someone like myself, it makes sense to invest in this. For that reason, it makes sense to invest in that for that reason. And before you know it, and this is why we're having this conversation now, it would have been far more comfortable for me to come in front of all these people when everyone's panicking, because obviously the average person would be far more receptive to my message in that environment. But it takes time to put things into place. Like, for example, it took time. I consider myself pretty well diversified. Like I do okay in real estate here in Romania. I have crypto holdings. I have holdings across many different assets. And you cannot just snap your fingers and make that happen. Like, especially when it comes to things like real estate, you have to find properties. You have to do you have to put in the work. Less so maybe when it comes to other assets, but still positioning yourself is going to take time. And this is why essentially my main takeaway, the only thing I want from people, it's not even if they want to buy my book or subscribe to the channel, of course I'd be happy for that. But I want to at least get them to do something meaningful today, because way too many people are complacent. Way too many people, especially, in light of the fact that doom and gloom predictions came and went, and that kind of decredibilized the very idea of financial perspective. So you have this perfect storm of circumstances, which make me, especially if you have a bit of a background in economic history, you end up realizing that the average person is probably going to be on the losing end of this. And it's probably my main driving force, because I've noticed it firsthand when I have to deal with my personal stuff. There are people behind these numbers, these equations, these,
right. They don't come out of nowhere. It's the reason why, right.
You cannot be an economist if you don't take into account, the human element. The fact that when it comes to what's coming, lives are going to be ruined. You're going to have friends, family members left and right who are going to be in pain. So even if you are well prepared, it's not going to be a pretty sight. So what I do want to tell the average person, however, is that for the reasons I outlined in my book, I truly believe that nasty stuff is coming our way. But despite there being nothing you can do to stop it, there's plenty you can do to position yourself accordingly. So essentially, my work revolves around having the wisdom it takes to understand that there are just things that are out of your control. But then again, you can derive power from that. You can derive a certain independence from that. And if you just, one page at a time reading the book, if you just embrace the habit of becoming an independent thinker, of being harder to manipulate, it's all going to yield dividends across all areas of your existence. Because
that's something we always press on. Is like, stop listening to what mommy and daddy and nanny state says, and actually look at the information kind of critically, think about it critically, read it, and all that good stuff. So my question for you is, short term, what is your financial outlook? I mean, I read the book and everything, or some of it, so I get your idea on the book, but kind of explain to the audience, short term, what are you thinking is going to happen in the financial markets, whether it's United States or abroad? I know you're abroad, and how they kind of intermingle as well.
What people need to realize is that we are over 10 years into this quote unquote recovery, and only once has it happened that more time passed between recessions than right now.
We've said that so many times on our show. We said we've only saw Bitcoin and cryptocurrency in the bull market so far. So we haven't even seen it in the bear market.
Exactly. And speaking of crypto, to kind of make the connection, I would have 2 words of advice for people who are in crypto as an economist. First and foremost, don't be surprised if the market will not reward you right away. Please remember what happened to precious metals after the financial crisis of 07-08. Eventually, yes, they went into their highs of 2011. But before that happened, the market initially reacted in a negative way. And way too many people assume that just because you do your homework in crypto and just because you hedge accordingly, you invest in the right things at the right time, you expect that the market's going to immediately reward you. What you fail to do is take into account that markets move into, as many know who trade, the direction of maximum pain for all parties involved. So if you make the mistake of being shaken out at the beginning just because the market didn't reward you right away, then there's going to be a price to pay. And my number 2 word of advice for people in crypto is, don't expect stuff that worked in 2017 and early 2018 to continue working, because I believe that the next crash might be a good catalyst for a big divergence type situation, in that, yes, of course, the average person might be more inclined to invest in Bitcoin or in a strong altcoin if he sees that banks are at risk of closing down, or if they see that confidence is starting to be undermined in currencies. But the same person is not going to spend all his money on Dentacoin. So I think that the next crash might be something that facilitates this kind of a big divergence. Perhaps we will no longer be able to just say crypto in a way that encompasses everything. Personally, I do expect Bitcoin and the best of the best in terms of altcoin with staying power, with development teams that know what they're doing, with technology that deserves to exist and represents a good example of what a blockchain can do for us.
Now, people love it when others shill coins. So do you have any altcoins in mind when you say this?
I have to admit, at the risk of sounding like a Bitcoin maximalist, but based on the trends I'm seeing with market dominance, the only one I'm in is, sorry guys, I'm really sorry,
No, it's
but
fine. We actually say that you want to trade your altcoins, get more Bitcoin. And then at the end of the day, about 95, 96% of most of these altcoin projects are going to be dead in the next 3 to 5 years. I mean,
yeah, I mean
realistic.
there are how many? There are 1,600 plus altcoins on coin market cap. There cannot be genuine
And
demand
like
for it.
800 of those came last year. So like all those are going to be gone.
Oh yeah. So I mean, the thing is, at this point, based on the trend I'm seeing in terms of market dominance, I want to be in Bitcoin. But I do trade. Like I don't fall in love with positions. So as market conditions change, I would be more than willing to adapt. But I do try to focus. I will not, even if I know personally people who have made a ton of money chasing pump and dump schemes, and hey, it worked for them. Whatever, that's fine. I personally choose not to do that. So even when I will be diversifying away from Bitcoin as market conditions dictate it, I will try to the best of my ability to focus on projects with staying power.
One of our audience members, Dan the Man, is asking, Bitcoin keeps going down. How will some of the altcoins survive?
Well, the short answer is that they might not, because that eventually it's a natural shakeout that has to occur, because people don't, I think, understand just the magnitude of how the altcoin scene, when it comes to especially pump and dump projects, has ended up becoming a bit of a huge casino. Like one of my videos on 1 Minute Economics is about pump and dump schemes, and I have to moderate it each and every week because I have people who promote their pump and dump groups on my video about how bad pump and dump schemes are. So just so people kind of understand the magnitude of it all. And some kind of a shakeout needs to occur, and that shakeout will manifest itself as there essentially no longer being liquidity for many of these projects. So unfortunately, I'm finding it very, very hard to envision a bullish scenario for your average Denta coin, for your average pump and dump coin. I'm sorry.
No, good stuff. All right, so back to the book as far as and just give people some ideas. Just chapter 3 alone. These are some big chapters too, people. Chapter 3 starts on page 9, ending on page 117. But again, as Andrei said, he talks about the tulip mania, the South Sea bubble, the Mississippi bubble, the British Railway. We got Florida real estate boom. I mean, he literally goes through everything every decade, not just here in America. You have the Japanese bubble, the Asian financial crisis. I mean, you literally have it from everywhere around the world. So kind of with that, you build your book up talking about the history. Then you go into chapter 4 where you're talking about spotting the actual financial storms. Again, the sea of uncertainty, accepting limitations. What's the timeline on this next financial crisis? What would you say?
The number one difference between myself and other economists is that I choose to embrace my incompetence when it comes to predicting the future. And that, in all honesty, your guess is as good as mine. I don't know. What I can tell people is that you do have these various pockets of anomaly. From, I'm preaching to the choir on the crypto channel here about, how our financial system is overdependent on stimulus and yada, yada. You have that. You have the geopolitical implications. You have the cyclical elements. You have the fact that essentially after so many failed predictions time and time again about financial crisis, this is why I choose to do things differently, actually. People have been numbed. People tend to raise an eyebrow if you even dare talk about financial preparedness. And this creates, I do believe, the perfect storm type situation for me to say, okay, can I point exactly to what kind of a scenario will happen, when it will happen? No, I cannot. I really wish I could, because that way I could tell people, hey, just prepare for this particular scenario, and it would be much easier to execute that. But I don't, which is why I spend so much time telling people, hey, why don't you figure out how to do these things yourself? Because, I don't believe in one size fits all solutions. What I do believe is, look, I live in Romania. You live in that country. You live in that country. What are the particularities? Build your own strategies based on that. And unfortunately, I'm not selling a quick fix solution that says, hey, if you just follow these few simple steps, you can become financially secure over it. No, that's not what I'm selling. Instead, what I tell people is, the name of the game is landing on your feet. And if you diversify in the manner in which I teach you in the book, if you gradually make it a goal to have exposure to asset classes that complement one another, I've been on about 100 interviews with my book lounge, and I've been on crypto channels, I've been on gold channels. I've been trying to make people understand that, for example, gold and crypto, they are not arch enemies. They're assets that complement one another. The same principle is valid when it comes to other asset classes. And that together, like, for example, my real estate. If things if something negative happens, will I collect the same amount of rent income as I do right now? Probably not. But I will still collect rent income. People will still need a roof over their heads. The same way, some of your assets are going to outperform, some of them are not going to do so well. But in the end, you're going to land on your feet. And just to put things into perspective, think about studies like the 2015 bank rate one in the United States about the average household in the strongest country in the world and how it wouldn't be able to withstand something like a $500 emergency bill.
Right, that's crazy. Right.
Kind of keep these things in perspective, and you're going to realize that just a little bit of financial preparedness, because just like what I do with my YouTube channel, it's not my intention to take over people's lives. Instead, I'm all about helping them in the right dose and in a way that doesn't interfere with their family life, with their job, with their business, whatever, making it clear that even a little bit of effort that you put into economic preparedness right now is going to generate results that are asymmetrically in your favor. But you do have to take action now when nobody around you
is work. So with that, what's your thoughts? You have the chapter about central banking shenanigans, which of course we always talk about here. Central bank, the Fed, fiat currency. What are your thoughts on the central bank, their shenanigans, and then fiat currency in general, and the future of it?
If you're the head of a central bank, you want to avoid one thing and one thing only: being that guy, the guy under whom it all comes crashing down. So essentially, the head of a central bank is always going to have all the incentive in the world to kick the can down the road, no matter what. And that is essentially what happened. You had your dot-com bubble. Interest rates went down to 1%. Oh my God. That led to a bigger bubble, the real estate one. Interest rates went down to 0 in the US, negative here in the European Union, negative in Japan. But don't worry, the day was saved by central banks. That has been the narrative that was continuously pushed. But it can now go on forever. Like, for example, during the last phase of monetary shenanigans, you had in the United States roughly $1 trillion per year, $85 billion a month, pumped into the system by the Federal Reserve. Once again, speaking of historic context, from 1913, when the Federal Reserve appeared, up until the Great Recession, the monetary base, and I have a video about this on my channel, had reached 850 billion or so. People have come to accept the unsustainable as status quo, and they don't even blink when saying that, yeah, of course, there was more money pumped into the system in 1 year than had existed after almost 100 years of central banking. We've come to accept these things as normal. We've come to accept, debt to GDP ratios of over 100% when it comes to pretty much all developed countries. Let's not even talk about over 200% in Japan. We've accepted them as something normal. And eventually, there has to be some kind of a narrative change. And in my opinion, that's the elephant in the room. And that's the idea I've continuously pushed in these interviews I've been on. I trade crypto on leverage occasionally. I'm not easily spooked by the perspective of stock markets crashing by 60%. I am, however, terrified of what happens next when the narrative changes, when people realize that the elephant in the room is precisely this narrative. And when they start saying stuff from, yeah, we're in trouble, the economy is crashing, but hey, don't worry, governments and central banks are here to save the day. What happens when they switch from that to, hey, who exactly can bail out governments and central banks? When that happens, all bets are off. And as someone who grew up in Eastern Europe, where we had banking panics, we didn't have hyperinflation, but we had very high inflations. I've grown to be accustomed with the idea that systems don't always work. And my book is pretty much about making people understand just that. Even in a developed country like the United States, with many institutions that safeguard against one another and a system that just looks so robust, even in these countries, society as we know it hangs on by a thinner thread than people realize. And to a large degree, that thread is represented by confidence. Once confidence is lost, I have no idea what happens next. If people lose confidence in the dollar, will the IMF be able to impose a new monetary system based on the SDR like they're planning to do? Maybe. Would I put all my money on it? No, I wouldn't.
Well, no, now they're planning to do their CBDCs, their central bank digital currencies, which will crash. I think they'll crash and burn, but I also think that they have a chance to succeed because so many people watch TV, aren't easily manipulated. They can literally just unroll it and say this is the future of banking, even though it's exactly what we have now. And unfortunately, I think a large part of especially some of the superpowers in the world, their populations would just follow along and say, hey, this is the government and banks are telling me to do next, so we have to do it. So,
and just having that arrogance of assuming that in a context like the one I envision, a context in which people lose confidence in precisely the system, you as an institution which tends to be identified with the system are going to easily push a solution. I don't think that's the smartest thing in the world. And that's why the safest bet, the safest thing that I know of is just expecting the unexpected, preparing for the unexpected. It's obviously a lot harder than just following a guru on YouTube or on mainstream television who thinks he knows exactly what's going to happen. But I could not think of any other way of teaching economics. I could not think of any other way of getting people to think. And I like to believe that, as time passes, my channel keeps being here. But time passes, gurus come and go, and I like to brand myself as the guy who's always going to be here. So I know people, whether they want to lose weight, whether they want to make money, or whether they want to become financially secure, it's just human nature to want results quickly and effortlessly. Except it doesn't really work. And I'm kind of the guy who you come to when you realize that.
We're right here in the same boat with you. Don't worry. So real quick, someone asks, where would you recommend purchasing gold?
Okay, speaking of gold, it depends a lot on your country. Like in the United States, you have an amazing infrastructure for buying and selling gold. You have these shops all over the place. It's easy to do. Here in Romania, it's ridiculously hard to do, which is why, again, it's so important to have a strategy based on your needs. Here in Romania, yeah, we have maybe 2 banks that sell you physical gold. But then if you want to sell it back to them the next day because you need money for an emergency, you're going to take a huge haircut. The same way, it's in a country like Romania and many other places in the world, it's just so darn difficult to do. Like, so my advice depends. If you live in the United States, come on, there are plenty of decent ways to buy gold to and you're always going to have a reasonable infrastructure in place to sell it back. If you live in a country like Romania where we don't have that infrastructure of places to buy and sell gold, the only way, but you have to put in the work, the only way to buy gold at a price that enables you to sell it back at least break even the next day is to contact people yourself, to buy it from average people, to get your own gold testing kit. Right. I know it sounds so ridiculous,
but it's worth it. You're right. In certain countries, worth it. I will say if you can afford the plane ticket, go to the Middle East, people, Dubai, Bahrain, all those countries that have the purest gold out there that's regulated by the government, 22 carats, 24 carats. You can buy that by the bulk and bring as much back as customs will allow you, and it will actually still be worth more doing it there again at that ground level wholesale than doing it retail at some of your other first world countries.
Oh, yeah. Just remember that the real difficulty might be when you have to sell it. So it's, for example, here in Romania, there is this guy who had a blog about the Argentinian crisis. It was a pretty good blog, and he documented his journey, what happened, what not. And he said that actually in Argentina, which is a country that I consider pretty similar to Romania, not perfectly similar, but enough. And in Argentina, for example, people who bought 22, the best of the best in terms of gold, they didn't exactly do well because when they had to sell it, they weren't able to extract maximum value from it. And the ones who managed to sell at a decent price were the ones who essentially, like what I've said before, bought jewelry directly from people. And then you didn't have a markup, you didn't have value-added tax like we have here in Europe to pay, and it was kind of okay. But it's really great for those of you who live in the US that you have such an amazingly easy time.
Right. No, for sure. We were definitely lucky in that. All right. So back to the book. Let's say a person is, hey, I'm working an hourly job. I make a little bit of money here and there. I don't have a lot in savings. I have kids maybe, or I have other obligations to where, monthly is just a drain on my resources. I read your book. I understand, a crisis is coming. How do I position myself for success? What do I do next?
One of the most common questions, probably the most common one I get, is exactly that. Like, what do I invest in if I don't have a lot of money? Because it's easy to talk about diversification if someone with, 300K worth of savings comes asking you for advice. It's harder in this situation. And what I tell people is that you don't have any, first of all, you have to move towards investment with exponentially high returns. And the best investments that I know of, and my belief has been reinforced time and time again, are investments in yourself. Like, you can buy, a book for next to nothing, and many of the things you're going to learn from that book won't have expiration dates. So if you essentially do your best, if you had a time machine to travel to the end of your life and calculate the ROI associated with reading some of your best books that you've read, I think you would be very happy with the outcome. At the same time, understand that the goal is landing on your feet. Like, even if you live in a country like Syria, for example, a poor country, and might be forced to leave the country, you probably cannot afford to buy 1 Bitcoin or 2 Bitcoin, or you cannot afford to buy all that much physical gold. But even if you buy a bit of silver, even if you buy a bit of Litecoin here and there, then if you have to, for example, an extreme situation, leave the country, then at least those few Litecoins that you bought, or that 30% of a Bitcoin that you bought, is going to enable you to pay rent in your new country of residence for a few months. It's going to enable you to find a job, to get back on your feet. So people make the mistake of assuming that, oh, just because I don't have a lot of money, it means I shouldn't have to diversify. No. Time and time again, it's proven. And I mean, I started all over again from scratch. I started my businesses with $0 to my name. I ended up losing all my money, had $0 to my name again, and started all over again. People tend to greatly overestimate how much money it takes to start over. I've done it. It's not that difficult. And again, don't be, bummed by the fact that you cannot afford 1 Bitcoin, or you cannot afford, all a few ounces of gold or whatever. That's just the way it is. It doesn't mean you have an excuse not to diversify and say, hey, I'm just going to keep all my money in fiat and it's going to be perfect. No. Have a cushion of cash. Money's like, it is kind of like oxygen in that respect, in that you don't notice it, but when you need it and don't have it, you're going to notice. So have a cushion of cash. Have even if a little bit of exposure to crypto, to precious metals, and it would still be enough to build a kind of a stash that it takes to land on your feet, because it doesn't take that much to land on your feet.
Good stuff. All right, so before we let you go, last thoughts as far as what message do you want to leave from the book? What's the one message or the last few messages you want to make sure people take from the book?
If there's one thing I've learned as an entrepreneur, as an investor, as an economist, is that over half the battle is just showing up. Over half the battle is putting in the work. Like with my book, I did try to explain to people that I genuinely don't care about the money. So I have, like, this week I have a promotion going on where it's just 99 cents if you buy it until Sunday, the 12th of August. The same way, don't have a pessimistic outlook in life. Like I try to tell everyone that my book launch is not a funeral. So I even have on my channel, again, until Sunday, a contest. I got so many sponsors on board. Speaking of not affording 1 Bitcoin, 1 Bitcoin is actually the main prize of my contest. And I have a bunch of smaller ones as well, where I reward people for like spreading the word and stuff like that. Be an optimist in life, but when making plans, you had better be pessimistic. This is my main message to people. It doesn't take much. It does absolutely no good to be depressed. It does absolutely no good to get on, to switch to full-on panic mode. No. You are fortunate enough to be kind of tuning into this conversation right now when nobody around you is panicking. You have more than enough time and resources at your disposal to position yourself properly. It's not hard to do. If you just make it a goal, whether you buy the book or not, whether you subscribe to my channel or not, if you just make it a goal to do something meaningful after this conversation is over, then I consider it a huge victory. For every person, that doesn't close this browser tab and binge watches stuff on Netflix without doing anything, an angel is going to get its wings, basically. So,
right.
So that's the only victory I could ask for.
All right, now where can we find your book at? You said it's on 99 cents for a total of 6 more days, people, to August 12th. 99 cents, no reason not to go get it. $1. Yeah, over 400 pages telling you all about financial history from the 1800s, before then we talk about tulip mania. So where can I find it at?
Yeah, I tell people it's the perfect balance between essentially giving the book away, but just symbolically having people invest 99 cents to kind of have skin in the game. And they can find it everywhere books are sold. The digital and print versions are on Amazon and Barnes & Noble. The digital-only version is on iBooks, on Apple's app, and on Kobo. They can just search for the name of the book, or they can head on over to ageofanomaly.com, which is a small website I set up just so people have all of the links to where they can find the book. Or, of course, to know what I'm up to with the contest, with the book launch and everything, you can just head on over to the 1 Minute Economics YouTube channel, and I'll be happy to have you there.
And we're going to show one of those videos here for our break with you as well. But is that the book in the background? I'm looking at it. Can you bring that closer to the camera for people to see?
Yeah, this is the book. I have fallen in love with this cover because I do believe it illustrates rather nicely the situation we find ourselves in that this is where we are right now. We're kind of staring at these many storm clouds that are gathering, and individually, each storm cloud could be considered a major cause for concern, but collectively, they should they should make you understand that the stakes are high. Certainly high enough to warrant the little bit of time it takes to read this book. It's a huge book, but my promise to people is that it's going to be like you have a friend talking to you, like what we're doing right now, a friend who just so happens to be good at economics and money related stuff.
No, for sure. I also felt again, it was some of the things I've heard of in the past that I never actually read about myself. Again, like I mentioned the Japanese bubble earlier, the aging financial crisis. I had no reason to really look into that. So, and it was easily digestible as well. So, I definitely appreciate that part of the book. Brexit. What's your thoughts on Brexit? While I still have you, actually.
Those who look at economic history cannot help but notice that certain patterns are just way too obvious. Like having, I don't know, a Great Depression. We had the Great Depression of 1929. What happened next? Well, you had a bunch of countries that desperately tried to weaken their currencies so as to boost exports. What happened next? Next, that wasn't enough, and full-on trade wars started appearing. What happened next? We all know what happened next, because so many times throughout history, if you take a look at even our major armed conflicts, it's very rare to come across one which didn't have a meaningful economic origin. The same principle, and the Brexit kind of ties into that. We had the Great Recession. Some major shifts took place, and after that, it's pretty safe to say that once again countries were desperate to weaken their currencies and boost exports. Right now, what worries me is not the Brexit in and of itself. If it were just a Brexit, I would not be worried. What worries me is that just like in the parallel I've drawn right now, just quickly, this ties into a broader picture where more and more countries are embracing protectionist policies. And throughout history, of course, we cannot never be certain that history is going to repeat itself 100%, but throughout history, whenever these sets of circumstances occurred, the end result wasn't pretty. So, if we kind of see the Brexit in this context as a growing trend that has been materializing in terms of countries wanting to protect their economies at all costs, even if it means embarking on a protectionist journey, I do believe it's a major, major cause for concern.
The market capitalization of there we go. I was letting your video. No, yeah. So, and those are the principles that we think here, at least on our channel, that those are going to be the things, like you said, you never know, because with precious metals, right after financial crisis, 2007, 2008, it took a few years for them to bounce back. And that might happen with crypto. We're hoping it doesn't take a few years, but we do believe that kind of with your book as well, that an impending financial crisis is on its way. It's been over 10 years now. It's going way too long. Not only is it over 10 years, it's kind of like what you said. It's over 10 years. We print out a bunch of monopoly money more than any time in history. So all those things compound together. It just doesn't make sense for fiat currency, especially the U.S. dollar, to be where it's at right now. So we also think a crash on the way. And then if that does happen, we're, of course, we're in the crypto game. So we're looking to see how that will influence that market specifically. But like I said, gold, precious metals are also his partner in crime. So we have to look at that market as well.
Oh yeah, for sure. We have the privilege of being very well positioned. Would we all love to have a time machine and travel back to Bitcoin Talk in 2009 and buy that guy's 10,000 Bitcoin for $50? Yeah, that would be nice. But even at these current price levels, there's plenty of upside potential on the table, I feel. But it's not for everyone. And if you get involved in crypto, if you want to have staying power in crypto, and many people will not have staying power in crypto when it comes to traders, the average person who's involved, you need a stomach for this. You need to understand that crypto is not what you want it to be. Crypto is what it is. And if you cannot adapt to this kind of landscape that we have with these aggressive boom and bust cycles, if this stuff is too much for you, then you're going to have a hard time. Those of us who, however, who are in it for the long haul and who try to study crypto, see what happened in the past, and do their best to position themselves in a way for them to have staying power, I think they're going to be very happy. And I think many, many years down the road, you're going to look back at August of 2018 and you're going to be pretty happy with your choices.
We think the same. It's a long-term game plan. Again, that's ageofanomaly.com for those who are asking. We just asked, is the paperback also 99 cents or is it just the
No, it's just the digital version, especially
okay.
since it's 400 plus pages. It's just a huge cost to print the paperback. So unfortunately, no.
No problem. So 99 cents for the electronic version, folks. And how much is the paperback version?
I don't know what it's priced at. It is priced in the high teens. I
Okay,
think
yeah,
something
so
like that.
20 bucks. Still, that's a deal, people. It's 400 pages. It's telling you all about the history of financial markets everywhere around the world, and is outlining a path for you moving forward as well. So I'm gonna try to see if I can sync this one of your 1 minute videos, 1 minute economics. In again, you can find them on YouTube, but about the market capitalization, explained it in 1 minute, stocks, Bitcoin, and cryptocurrency. So let me see if I can get this screen share to actually work here, which would be amazing if it does. Application window. There we go. Boom. So I'll just let this play one moment, and afterwards we'll say bye to you, Andre.
Company, or market cap as it's also called, basically tells us how much money would be generated by selling all of a company's shares at the current market price. In other words, you multiply the market price of one share by the number of outstanding shares, and there you have it, that's the market cap. Of course, the number of shares isn't static. For example, it goes up if that company issues new shares so as to raise capital. Okay, what about cryptocurrencies? Well, the same principle applies. You multiply the market price of one coin by the number of coins in circulation, and bam, you just calculated that cryptocurrency's market cap. Just like with stocks, the number of coins in circulation isn't static, and as new coins are mined, it goes up. Now, is the market cap a useful indicator? Sure, but it definitely has its limitations, and please understand that it does not tell you how much a company is actually worth. Realistically speaking, if someone who owns 10% of a company's shares decides to instantly sell all of them on the open market, the share price would crash and he'd get nowhere near the amount he expected. With cryptocurrencies, this principle applies even more so, as they're for the most part a lot less liquid than stocks. Let's assume John launches a cryptocurrency called JohnCoin, which initially has 10 million coins in circulation. Unfortunately, nobody cares except for his wife, who buys one JohnCoin from him at $1,000, thereby establishing a market price. Multiply $1,000 by the 10 million coins in circulation, and you get a market cap of $10 billion for JohnCoin, which would, of course, be ridiculously unrealistic. As a general rule, it's safe to say that the less liquid shares or cryptocurrencies are, the less relevant the market cap should be considered.
So I just wanted to do that video. I thought that was a great video because that's one of the things we often talk about, is just because, you know, the market cap's high and all that doesn't mean the coin actually worth anything, or the price. It could be just because, like I said, one person has 10% of it and they're just holding on to it. So thought that was a great video. But again, wanted to show that to people so they can see some of the work you do. We actually just had a viewer who says your voice is soothing. You need to actually do audio books. So if you haven't already, it's something to think of.
My first book has an audiobook version, and I paid a narrator to kind of speak, but this time I'm going to record it myself.
There you go. You are the narrator. But again, I want to thank Andre for being here. You can find him on his YouTube channel at 1 Minute Economics. You just saw that 1 minute video there talking about market cap and cryptocurrencies in the regular market as well. Of course, his book, The Age of Anomaly, Spotting Financial Storms in a Sea of Uncertainty, is out now, available at all book stores and online, of course, at Amazon. 99 cents for the e-version. People, there's no reason not to get this packed full of information. I'm telling you, it's definitely worth $1 buy. If you want the paperback book, like myself, I like to have a physical copy, which I'm gonna go ahead and order that as well. It's 20 bucks, less than 20 bucks actually. People, it's way less than what we're losing in the crypto market as these flusters continue to kick in. So definitely want to have you back one of these days, Andre. We appreciate you being here. And any last thoughts?
I'm just very grateful for the opportunity to be here. I hope people extract a ton of value from our conversation today. And once again, if there's only one thing to remember, please be an optimist in life, but when making plans, try to be pessimistic.
Sounds good. Like I said, we're definitely going to have you back here again. And thanks again for being here today.
Pleasure. Take care, guys.
All right. Take care, Andre. Cheers.